Today's Tuesday tax tip has to do with capital gains and losses and how they are taxed. The first thing we have to do in order to determine the taxation of capital gains and losses is determine what a capital asset is. The Internal Revenue Code defines capital assets by basically telling you what they are not. They are not inventory, accounts receivable, notes receivable, depreciable property, or real estate used in trade or businesses. So basically, it's assets that are not used in trade or businesses. Now, the taxation of the gains depends on two things. One, whether it's a long-term or short-term gain, and two, the tax bracket of the taxpayer. For a short-term gain, that is any asset that is sold that is held 1 year or less is a short-term gain. Any asset that's held for more than a year and then sold at a gain, that's considered a long-term gain. Short-term gains are always taxed at the taxpayer's ordinary income tax rate, which range from 10% to 39.6%. So whatever your ordinary tax bracket is, a short-term gain is taxed at that. A long-term gain is taxed, if you're in the 10 or 15% bracket, it's taxed at 0%. If you're anywhere from the 25% to the 35% bracket, capital gains are taxed at 15%. If you're in the 39.6% bracket, then capital gains are taxed at 20%. Just to give you a ballpark idea, the 25% bracket starts at $73,801 for married joint taxpayers, $36,901 for single and married filing separately taxpayers, and $49,401 for head of household taxpayers. The 39.6% bracket starts at obviously much higher amounts. For married filing joint taxpayers, it's $457,601. For single taxpayers, $406,751. Head of household, $432,201. And married filing separately, $228,801. Now, if you have losses from your capital transactions, they can be taken up to $3,000. So you can take $3,000 of losses over your gains. So in other words, if you had $10,000 in gains and you had $20,000 in losses, you could use $13,000 of those losses in 1 year. You could have a $3,000 loss, which just goes against your ordinary income. The remaining $7,000 would be carried over to the following year, which you could again use $3,000, or possibly all $7,000 if you had at least $4,000 of gains. Hope this tip helps you out, and I'll see you again next week.